All right, we are recording officially. Welcome to Momentum Monday, February 3rd, 2025. Um, and we are recording here this morning around 11 a.m. Eastern time. So we are, we had a lot of talk over the weekend, and we'll get into a lot of this stuff, but we had a lot of talk over the weekend about the tariffs, and the Trump administration announced some tariffs on Mexico and Canada. And the market overnight certainly had a giant reaction to that. And some of the crypto holdings still have sort of an outsized reaction to that. But by and large, we've had some decent recovery, which is to me kind of it's definitely good news, but it goes to show that there's a lot of people taking this as a buying opportunity. And we'll let you get into the fine print first, and then we'll kind of dive into this all.
Yeah,
But at
let's.
least right off the bat, we wanted to talk about kind of some,
Yeah, I mean, I've
current happenings.
yeah got me my brain firing here thinking about some of these things. Yeah, listen up. The podcast is for informational purposes only, meaning it's here to educate, entertain, not specifically to tell you what to do with your money. We're not your particular financial advisors. Unless we are, in which case, we can always chat offline about your specific situation. But these videos are getting a lot more views and a lot more traction and you know a substantial amount of viewership for people that aren't clients. So just keep in mind that the advice that we give, or that rather the commentary that we give on things going on in the markets, they're just that. Hopefully it's very educational and informative to you. And if you have questions about your specific situation, reach out to your advisor. And if you don't have one, go to momentumwealth.us, schedule a time to chat, and we'd be more than happy to bring you into the firm and make you a part of our client family.
Yep, well said. So we will talk about what's happening currently, but let's dive into kind of the week that was last week, the week of 27th. S&P was down about 1%. NASDAQ was down 1.39. Dow, actually the only index that was positive, up 0.29. Russell 2000 down a little bit under 1%. And then you move to your more crypto and commodity markets. Gold was up 1.14, makes sense. Silver up 2.15, 10-year bond up 0.59, and Bitcoin was down 2.3 just last week. So here we are. The market is open and raring to go right now, and we've got here in real time. Let's see. Markets are kind of neutral at this point. I mean, they had a little jolt here at the beginning, at the opening, but we've
Yeah,
got index S&P
the
down about 70 basis points, Dow down about 30, and then Nasdaq is taking it on the chin with about 1.1% down as of right now.
yeah. So it looks like at the beginning of the podcast, you talked about the tariffs, and I was texting with some clients last night that I give a lot of advice on in dealing with kind of some esoteric elements of crypto, things that aren't just a part in ETF or mutual fund, things that are really kind of more difficult, more complex, things that we're working towards being able to do with our clients. But that's, regulations up until this point haven't moved very quickly. But it looks like, that dam may break at any moment. And so we'll be able to do a little bit more uh, higher growth, more aggressive crypto strategies for people. But with that being said, I was looking at the crypto markets and texting some clients, had some questions about things, given some opinion and advice on buying the dip. And it just seemed, the crypto markets trade 24/7, and they move much quicker than your TradFi markets. And it was just crazy amounts of liquidity just getting sucked out of the system, either people shorting the market, or most likely because the market dipped, they were getting called out on their margin trades. And if you have a 100x margin on an 80 vol asset, you're going to get called out at some point in time. You're going to get stomped to the ground and lose all your money and have to start from scratch. So it was just crazy.
Margin meaning you just need to kind of clarify a few of the
It's
terms that
mar-
you're using. Margin is using debt essentially to buy equity
yeah.
positions,
So
stock
let's say
positions, or
the way it works.
cryptocurrency.
in the TradFi side of things. So if we have a client that has margin in their account, that means that you can buy, generally speaking, depending on the stock you're buying, 50% more than the money that you have in the account. So if you have 100,000, you can buy $150,000 worth of that, of a particular stock. Now in the crypto markets, you can take 100,000 and buy 5 million, 10 million dollars. So if it works to your advantage, it's great for you. But if that crypto goes 5% the other way, it can wipe out your entire position. And so that's something.
Very,
It's
yeah.
crazy to recommend levered trades with crypto. I mean, you're already dealing with, again, an 80 vol asset. You're dealing with an asset that can move in huge swings. I mean, my God, how much more juice do we need, right? I mean, buying on margin these crazy uh, volatile assets. Anyway, that's beside the point. So that led to me and you texting some and kind of passing back and forth. Are you there? I saw the screen was frozen. Can you hear me?
I'm
Um,
here. Yeah.
with trying to get a good handle on what was actually driving that volatility, because the tariff
Well,
discussion,
first of all, the tariffs
you
are
know,
not implemented yet. The tariffs are supposed to go into action tomorrow, February
you
4th.
know, just, I mean, headline like 3 minutes ago, the Mexicans agreed with some terms that the Trump administration put forth
Okay.
while they figure out, I guess, the give and take on things. They're going to send, like 10,000 soldiers to the border and a bunch of other stuff that's in there. So that's been delayed. That's
Yeah.
the reason why. But, I just can't.
Okay. So that makes sense why the market is kind of turned around.
Yeah.
But let's just get the baseline. The proposed tariffs Trump had talked about was 25% tariff on all imports from Canada and Mexico, and a 10% uh, on Chinese imports. And then he had a carve out there of 10% tariff for energy resources, including oil and natural gas from Canada. And it's really, um, you can read a lot about, everybody has a different opinion on what it is, but the thing that seems to be driving Trump, and tariffs are not anything new to the Trump administration. His previous administration, he implemented tariffs back in March of 2018. We saw a drop in the markets at that point, and then kind of a recovery later on. So Trump himself has talked about this too, in that he understands the short-term pain, but his goal is to kind of provide long-term benefit for that short-term pain. And whether he's referring to short-term pain in the market or short-term economic pain or both, anybody's guess. But the deal for Trump is the flow of illegal immigrants coming over the borders, both north and south, and then really fentanyl and methamphetamine, which is huge. And a lot of people don't understand that it's really big in Canada. That's where they get a lot of it through. They have whole cities that are just eaten up with this. There's a whole, like, I've got this 41-page essay here I'm going to read today about the global trade system involving China, and it has ties to the Panama Canal situation. All of that is that it's very clear to a lot of people, and it must be to Trump and his intelligence, that there are ways that China is getting these drugs into the system, into the West, and he's trying to stop it. So whether you agree or disagree with the tariff situation, that's sort of the background behind it, is that it's just so dangerous. There are so many Americans and, certainly people in other parts of the world. But, this is really where it affects us the most. Um, they're just being ravaged by these drugs that are coming across the border, and I think Trump is really taking a hard stance against it. And I think he's more focused, or he has more of a clear line of sight than I think he even did in the first administration. I mean, we've talked about it before. There is no denying that this is sort of a different kind of person that we have as president now.
Yeah, I mean, we're like what, 14 days into it, and they're already doing what took an entire year to do the last time. Fentanyl is a big problem. I personally know people who have had family members die from accidental overdose, and it like was just literally just a recent high school grad, full paid scholarship going to university. I want to thank the University of Georgia, and went to a friend's house, complained about a headache. The friend said, "Here, take this pain pill," and he died because the kid had gotten Percocet or something off the street, and it was laced with fentanyl. Had no idea. Gave it to his friend who never did drugs and died. And we know of other people that have overdosed, um, unintentionally. It's a big deal. And so there is a moral part of this that I think most Americans, because I would venture to say just the 6 degrees of separation, every single one of us knows someone either firsthand or knows somebody who's had a family member or a friend secondhand that have died from fentanyl or some type of drug related overdose. So there's kind of that I think the American people aren't going to they do not want to tolerate that any longer. But that aside from the economics of what's going on with the tariffs, you sent me an interesting snippet of an article, and I think more research needs to be done. So I won't get into the specifics of that, but you know, that argument kind of lays the foundation that a lot of people are not realizing the end game with the tariff situation, and it could ultimately lead to what they call as a second Plaza Accords, which the Plaza Accords took place, I believe, back in the 80s to kind of reset the trade system after coming off of Bretton Woods in the early 70s when the Americans detached from the gold standard and went more to the petrodollar. And so, I
It was
think
1985. Yeah.
yeah, so that is a very compelling case, and I think that as we read more into it and get a greater understanding and start seeing how the markets are reacting, we can actually bring this to the clients and to the public at large and kind of give our opinion on it. But the gist of it is, if they play their cards right, um, the markets won't be jittery because of the tariff situation. The markets could be, you know, poised for some explosive growth, the likes of which we haven't really seen in quite some time. So we'll see. I mean, these things have to play out, but this is why you have a good strategy and you stick to it, and you don't let headlines scare you. Because just imagine, if you were looking at the pre-market, the after hours last night, the pre-market this morning, and you're like, oh my God, I just can't take it. I got to sell. Look, the market's already recovered,
Yeah.
right? You can't
Yeah.
react. A lot of this is done to manipulate the market and manipulate what they call weak hands. And up until around 11 or 12 last night, I was communicating with people, giving them advice on should they be buying the dip in their crypto accounts on certain projects. Um, and I really looking at it, to me, I told one client, I was like, listen, this looks like probably the last true buy the dip opportunity of this bull cycle. And we're already seeing it. I was just looking at the crypto markets as a whole, and the bounce back has been pretty noticeable. So, yeah, I mean, people don't need to get too up in arms about things. These trade deals are going to be negotiated, and at the end of the day, because we have deficits with pretty much every country in the world, any trade war is going to hurt the other person way, way more than it hurts us. So,
Well, you
you
look
know,
at that. Yeah. I mean, it's 25 to 30% of the GDP of both Canada and Mexico, and it's like 2% of ours, the
yeah,
tariffs. So it's not the proportion, it's not a proportional response, what we saw
yeah,
with the markets. Now, it makes sense because, people are jittery and they may not know what's going on, but this is one of the things that we talked about a few weeks ago, which is that 2016 Trump, what I'll just call him, 2000, Trump 1.0, and maybe is a better term. Trump 1.0 had no problem putting tariffs on, and the market kind of had the flip-flop reaction because it was a situation we had never been in before. We didn't know what kind of the outcome was for it, but this is 2.0 at this point. We know that it's a negotiation tactic. So the movement of the markets, to your point, there may be some other underlying issues here, but it doesn't make sense to me why it would be such a big reaction. But with you saying that I haven't seen that news this morning that they're delaying it or they've heard Mexico. from Mexico, and I know he was supposed to speak to Trudeau in Canada this morning. So um, maybe it does have a bigger effect. But there's something else that they did over the weekend was the kind of closing the de minimis loophole that is going to really affect these Chinese companies like Temu and Shine, and these
Thought it was
companies
Sheen.
that can ship Sheen,
Sheen.
Shine, yeah, I don't know. Yeah, they use this loophole to ship these goods to America and pay, very little to no taxes on it, whereas American companies ship and they pay hundreds of millions of dollars in taxes. And it's just, there's a disparity there that is very strange. Not to mention, all the stuff that you can get on there, and maybe it's laced with certain things, or it's cheap, but there are risks involved in it. I don't think anybody is
It all
denying that.
with those
Do
apps.
what?
The data they're getting from using those apps is more valuable than the you know
Right, yeah.
10-cent napkins or whatever it is, that you're getting from
Yeah,
there.
that's true.
I mean, I didn't know, 2 years ago I think I used it and I was like, what is this? And I got like just cheap stuff, maybe some drones that the kids ended up losing in the trees like 3 minutes after opening the box. Um, but then I just never really did it again. I mean, yeah, it's these things. We have to remember we are the most powerful country on planet Earth, and even though we have our problems with the deficit and the debt, you know, um, all of these things are gonna, if done correctly, could put us in an extremely, they keep using the term golden age, the administration. Of course, they're going to use something that has a positive connotation and good marketing, but um, there is the potential, if these things go the right way, for, again, some explosive growth in risk assets, um, potentially even in home values, which could be a net negative for the younger generation if interest rates don't come down. But we mentioned several times talking about the 10-year Treasury. There is a strategy that appears to be going on in the background tied with these tariff wars that could be essentially weaponizing tariff policy to get that 10-year down. Since the Fed's not doing it successfully, the Treasury is going to do it. But, some very positive things over the weekend, aside from, like you said, the market jitters with tariff policy, was it looks like Elon Musk and the Department of Government Efficiency, Doge, um, uncovered some pretty significant shenanigans going on within the Treasury Department and USAID. All of these things, as they aggressively go in and cut waste, that's also working towards helping get the 10-year Treasury um, down. We've got to get the U.S. government off of short-term financing. We need to be financing more in long-duration assets, and we got to get those interest rates down. And that's also
Well,
going
that's all
to
hand in hand with what's happening with all of the tariffs and everything. It's the purposeful devaluation of the dollar. All of that is it all plays into it, the same kind of conversation. It's all a line that you can pull through the whole thing.
yeah, it's a common thread, and I just really, next week I think we could go into more detail as we get more information. But the snippet of what you had sent me last night was it really helped put a clear line of thinking from each of these policy changes that are being taking place with the new administration towards just what we know and what we do is a have to. We know that we have to get the 10-year Treasury down. We know that we have to get balanced trade and secure
Hmm?
America's AI superpower. All of these things are kind of have tos if we want to have a really good market and a really good economy. So I'm glad to see
Yep.
the market is recovering. But again, this always goes back to staying the course, having a good strategy and a good plan, and not being shaken by news headlines from CNBC or things you read on Twitter just because everybody's running around saying that, the sky is falling, the sky is falling. And one
Yeah, I
thing,
saw a trader on Twitter say basically his principle that he follows is never sell on Monday. Thought that was pretty funny.
yeah, yeah. But some of your high growth names today, you look at Nvidia, Tesla, yeah, they're down. Nothing really to worry about. Look at Apple, um, down a little bit. You know, nothing too big. And then Amazon. Let's see, Amazon barely down, barely down.
Flat,
Prob-
basically.
Yeah, probably moving towards being up on the day. Um, so yeah,
Yeah, that's wild. So we've got basically all this, basically your sectors that are struggling today: industrials, financial, consumer, cyclical, and tech. All the other sectors are positive. You've got energy leading the pack, and then healthcare and communication following that. So it's very interesting. The other thing you had happen last week, which was also interesting, is that we saw the largest weekly inflow in 2 years last week, $8 billion inflow into the markets
mm,
over the last week period. So this is not indicative of uh, traders or analysts that are concerned about uh, the market position and where we're at. That's that's a vote of confidence, I would say, because you do have, we've talked about it before too. You do have a lot of cash on the sidelines, and so I would expect to see more and more over time of us hitting that metric of large weekly inflows. So we'll see how that works out. And maybe things like this are the catalyst to where they get a dip and they push it in, and it has this effect where it kind of brings the market back up. So, you know, the bottom line is we just wanted to talk about it just because it's kind of happening at the moment. But I think that short term, it's going to maybe present more of an issue than it will long term. Maybe some short term fluctuations in the market. Long term, we're not seeing any kind of um, alarm bells ringing for us.
yeah. Well, in other news, I'm wearing my Hawaiian shirt today because it's going to be 70 degrees and no more of this cold stuff, this white stuff that falls from the sky. I'm not sure what they call it, but the water gets hard and then there's this white stuff everywhere. But you know, looks like we're warming up. Springtime is coming. So what are we going to see kind of coming up this week for, seasonal things that are going to be happening? We have the ISM manufacturing PMI coming out. I think it's forecasted at 49 and a half. On our really informative podcast that unfortunately didn't get aired at the turn of the year, we spoke at length about the ISM manufacturing PMI. Really want to see that get over 50. I think tariffs may drive that to happen sooner rather than later, as people probably start to buy up, like you had mentioned, and try to get their inventory levels up so that they can be strategic in how they adjust their purchasing once they know what the tariff policies are going to be with their trading partners. Um,
Yep.
we got factory orders, JOLTS job openings, weekly jobless claims, Q4 productivity and labor costs. Nothing really too terribly exciting. Friday will be the jobs report. So that'll kind of tell us what the unemployment rate's going to be. So I think there what we have to keep an eye on, and how the unemployment rate and how it changes affects how quick the Fed either they stay on hold or how quick they go back to a policy of cutting and kind of cutting in larger basis point cuts than what the market would expect. What is how deportation is going to be affecting the the unemployment rate is calculated. Um, that's going to be very interesting because there's been a lot of people that have criticized over the last few years how the government has actually been counting those jobs to paint a much more rosy picture of what's going on in the jobs market than what's actually happening. So I think that's going to be something interesting to watch. It's too soon now, I think, to see if we're going to really see the unemployment rate tick up a little bit, but it wouldn't surprise me over the next few months for us to see the unemployment rate probably tick a little closer to 4.5 or 5%, and then probably after we get tax policy updates, probably start to trend back down to what I think Trump was normally around 3% or 3.2% in the first term, depending on how many manufacturing jobs actually come back to the country and take advantage of that new 15% tax rate for companies that have their products made here. So I
Right.
think too terribly exciting. Some
We've got
earnings.
a lot of earnings, a
Yep.
lot of earnings,
No,
earnings bonanza this week.
Yeah, number one I'm looking at is AMD. If somebody wants to kind of track a stock this week and how earnings, I think AMD is going to be very interesting to watch. Um, I know you had a few other
Got
ones
Google,
here.
Amazon, Disney, Pfizer, Palantir. It's a company in the news because of the tech AI stuff. Uh, Pepsi, PayPal, tons of them. I'll put this little screen up again like I did last week. Kind of look at a weekly view of it. But yeah, we're in earnings season, so that's going to be something else that's a catalyst to the market and a catalyst to some certain aspects of the market. But we'll see how that goes. Um, I wish the theme of the week is I would just take a deep breath. That's the theme of the week. Just take a deep breath. And maybe it'll be the theme of a couple of weeks as we get through all of this
Try
kind
to,
of.
you can try to get really deep into the ins and outs and kind of the game theory of what's going on with this policy or that policy. But, sometimes the best thing to do is just to tune out the noise, control what you can control, and make sure you're contributing to your 401k. Make sure you're contributing to your Roth or your traditional IRA, your HSA. Make sure that you're working with an advisor that you enjoy working with, that you have confidence in their investment strategy and how they approach the market, and then just stick with that plan and execute it throughout the year, year after year, and don't get sidetracked. A lot of this, again, is very interesting to delve into and to provide a reason as to why this or that is happening. But it's really not something you want to build a a portfolio around, because the media is going to swing you from one end to the other, and generally they're wrong. They're wrong. I mean, just look at the inverse Jim Cramer index to tell you. I mean, I think he does it for fun now. I think Jim Cramer says the exact opposite just for fun, because he is wrong so much. That's part of it. So yeah, don't get everybody take a deep breath, like Garrett said. Calm down. Everything's going to be fine, and um, I'm very optimistic about what risk assets are going to be doing this year. And when I say risk assets, all we're talking about is essentially non-cash investments, right? You're looking at assets that are volatile and can go up and down. Generally thought of as just the S&P 500, but I think all risk assets are poised for some potential for explosive growth. We can't guarantee that, of course, obviously.
Yeah, I mean, there's nothing that's changed our view that 2025 is going to be an up year. How up it's going to be, that's sort of in the cards. But we ended January a little under 3%. Unfortunately, we had that day toward the end of January where we kind of sold off a bit. But if we would have ended January over 3%, it would have kind of solidified our chance to have greater returns for the rest of the year, at least anecdotally, according to historical records. But still not bad. I think it ended up 2.9 or something like that, the January. And so, sort of the view of that is however January goes, so goes the rest of the year. So I think that people um, there's a general consensus that we'll see, maybe double digits, maybe not, maybe somewhere around 10 or so percent. Again, this is all speculation and a lot could come in and change that. There could be, other world events or something that comes along and does that. But if we're looking at a normal investing year based on a lot of information and a lot of data and historical precedents, that's what we would be looking at. Nothing that we're seeing is sort of shifting that. Obviously, a lot could change, but we will be here to help our clients walk through that. If you're watching this video and you don't have anybody on your side to do that, or somebody that's just, to volley back and forth with to talk about all these kind of things that happen in current events and investing, or if you have an advisor that you don't really hear from, we're big on communication. And so we pride ourselves on that. Um,
Yeah,
reach out. We'd love to
I'll tell
chat,
you
but
what. Got some breaking news here, Garrett. You've heard it here first. So Kraken, one of my preferred exchanges to use for crypto, it looks like they are taking inquiries now for RIAs, firms such as ourselves, to be able to have clients custody their assets for advisors to trade and build portfolios. So very interesting, just popped up here. Um,
yeah, that's a conversation for a whole nother video.
it's
That's
exciting. So, like, subscribe, share the video. And if you don't,
yeah.
just say it, you know, just give us help us with the algorithm too. So just be nice though. Don't just be mean in the comments section. Uh, you know, uh, my goodness, some people. But yes, feel free to share this video with friends and family members. If you have questions, always reach out to us, momentumwealth.us. Be more than happy to talk with you about your specific situation and how we help our clients um, navigate these interesting times we find ourselves in, and most importantly, plan for a retirement and a work-free life that you deserve and that you can enjoy. So we'll leave it at that unless you have another parting thought. I don't see it on the document.
No, I just would say, stay informed, stay prepared. Let's get the momentum going this week. And thanks for tuning in. And we'll see you guys next week.
All righty, take care.
Bye bye.